happening over with the CFTC and Binance and this kind of, did they come out and say outright that it was a commodity, that Ripple was? Am I conflating like three different things here?
Yeah, so there are a couple of very interesting things at play. So you brought up that suit by the CFTC. So they're coming after Binance. But in that suit, they're saying that Binance, Ether, and Litecoin are all commodities. And so that's something to celebrate within the crypto ecosystem, because typically the CFTC is a better regulator to have than the SEC. And then you brought up XRP, which is a token issued by Ripple Labs. Now, what's interesting there is that there has been this 2-year protracted legal battle between the Securities and Exchange Commission and Ripple Labs. And what's at stake here is whether this token that they issued is a commodity or a security. And if there is a ruling in favor of Ripple Labs saying, hey, this is a commodity, again, that undermines this argument being made by Gary Gensler at the SEC that a lot of these cryptocurrencies, virtually all of them except for Bitcoin, are under his remit. Funny enough, part of it is a call for regulation, but in another industry, the banking industry. So one would expect that crypto prices would be down as you have the two friendliest crypto banks collapse, liquidity just dry up. And then on top of that, you've got regulators targeting the two biggest digital asset exchanges out there with recent actions by the SEC and CFTC. But if anything, it's had the opposite effect. As we've been reporting, a lot of the concerns around banking regulation has actually, for a couple different reasons, been a good thing for Bitcoin. Goldman Sachs.
What's bad for banks is good for Bitcoin.
Yeah, I mean, it's apparently the best performing asset year to date, outpacing gold and the NASDAQ. And it's part of this larger narrative that risk assets are back.
Who saw it coming?
Well, I think that a lot of people within the crypto contingent like to say, hey, this is a safe haven when mainstream banking has certain failings. But really, it goes to that larger narrative of when the Fed, when there's this hope that the Fed might be more tepid in its approach to hiking up interest rates, then speculative asset classes like Bitcoin do well. And I think the big takeaway from the banking contagion of a couple of weeks ago was the fact that the Federal Reserve was both quick to step in and to provide what was largely seen as QE to the crypto contingent, in that bank term funding program. That extra lending to the banking sector was seen as a good thing. And there is this hope that recession signals might mean that there will be a reversal of course, a slowing down of interest rate hikes.
Some big names are calling for a pause on artificial intelligence, AI. The group is calling for a 6-month halt on the training of AI systems. Now, that group is not just a bunch of random people. It includes Elon Musk, Steve Wozniak, Forward Party co-chair and former presidential candidate Andrew Yang, and more than 1,000 others signing this warning letter. And that document asks the public to ponder the following questions. Should we let machines flood out information channels with propaganda and untruth? Should we automate away all the jobs, including the fulfilling ones? Should we risk loss of control of our civilization? Now, these are big questions, especially when we don't know how far this technology can go. And we know about the job market. We know about robots taking a lot of the manufacturing jobs over the last few decades. We get that. People have said the fast food worker's gone because you're going to have more robots making burgers and serving them. But the majority of Americans, many of them anyway, millions, tens of millions, work in what they call cognitively repetitive jobs, white-collar jobs, where, they put their kids through college, they pay the mortgage. Are those the jobs, the people in the cubicles in the office buildings around America, working for insurance companies or whatever, are those the jobs most at risk?
They are. You're talking about rules-based information processing jobs. It could be accounting. It could be a call center worker. It could be someone who's at an insurance company trying to make the forms match up. And this is a lot of freaking workers. You're talking about 44% of all American workers who are in either cognitive manual or cognitive intellectual jobs, repetitive cognitive jobs, I should say. And those repetitive cognitive jobs are actually much, much easier to automate than manual work that requires a robot with digits that can handle things. It's a lot easier to get AI to write reports, take on the work of a lot of college graduates.
You've talked about universal basic income. Is that where this all is headed?
I think we have to start looking very, very realistically at different ways to get people resources in an era where AI is going to take millions and millions of jobs in the blink of an eye. And I have been blown away by the capacity of a lot of these new tools and how much better they're getting. It's mind-blowing. And if we don't do something meaningful to get in front of it, you're going to see just gutted buildings, neighborhoods, communities that used to be filled with vibrant middle-class jobs. So what does that mean? I ran for president on universal basic income. I believe that that is going to be part of the foundation that we should lay so that people are watching this right now. If you're not worried about AI taking your job, then you're not paying attention.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And we got CNBC really trying to ride the Ripple and SEC case. And she asked, did they say that Ripple was a commodity? When no one said a thing like that, we all know it was part of a good script. We do know the CFTC has said Bitcoin, Ethereum, and Litecoin are commodities. And we know because XRP now has utility, and we can clearly see it, is definitely a commodity now. But we know this whole SEC case versus Ripple was to kick the regulation can down the road. We know Gary Gensler and Janet Yellen are the NWO chess pieces in order to land us inside the fourth industrial revolution. But guys, we know why crypto has been pumping overall, and that's because of the Fed. But we have not seen a bottom yet, and remember the Crypto Teacher told you. Just wait until this debt ceiling gets resolved. I'm not your financial advisor, not financial advice. Please do your own research. And then we have Elon Musk and others say put a halt on AI. And guys, we know Elon Musk has been warning about AI for a long time. But you know, Crypto Teacher has been warning about AI and writing about it for even a longer time. But we know Elon Musk has been heading all of this technology. And we know that crisis is around the corner, so therefore they can start building. And majority of the fourth industrial revolution would have been built by 2025. And how do we know this, guys? Because we hear the drums are beating. It's a light drum, but they're starting to get louder. We see Saudi Arabia and the other Asian countries moving over to China. And we see the Middle Eastern countries trading their natural resources in yuan with China. And remember, guys, when you have a plan, you move in phases. And remember, the Crypto Teacher told you.
More likely earnings is the cause, but now we've got what's going on in banking. You know, either rates have got to go back up because inflation's not cured, or if rates are right, then that means we've got an earnings recession coming, which means we go lower. You know, the regional banks are now going to get a form of regulation which makes it as hard for them as GSIBs. But the big banks have the advantage of scale, of diversification. Yeah. So sort of how does the small bank compete?
Bombshell dropped at the Senate banking hearing yesterday that $100 billion would have, and more importantly, could have left SVB in a single day, threatens potentially far-reaching changes in the banking industry and to regulation. Here's what Fed Vice Chair Michael Barr told the Senate Bank Committee happened after SVB. This was the day after $42 billion had already left the bank.
That morning, the bank let us know that they expected the outflow to be vastly larger based on client requests and what was in the queue. A total of $100 billion was scheduled to go out the door that day. The bank did not have enough collateral to meet that.
All right, by comparison, Senator Warner said in the biggest bank failure in U.S. history, Washington Mutual, $16 billion left in 10 days. Regulators faced with bank failures always try to hit the weekend where they get 2 free days to find a buyer. But the money moved too fast this time, and the bank had to be closed before it could be resolved. So what's the potential result of all this? It means potentially faster bank runs. It means banks will need to hold more liquidity. Regulators need to be tougher earlier. Not the case with Silicon Valley. There may be a need for more deposit insurance to prevent these fast runs, and costlier bank resolutions, because it costs more to shut a bank and sell it than it does to find a buyer before you close the doors. Former New York Fed President Bill Dudley told me the other day, when the bank is closed, the franchise is damaged as customers flee, and there may be other costs such as writing off stranded technology assets, winding up business lines that are less attractive, and legal exposure from the failure. That could account, guys, for the large $20 billion tab and counting for shuttering SVB. There's a theory of SVB that says, hey, all of this is unique. The bank run, the supervisory failure, poor asset management, and a bungled sale by the FDIC. So no big changes are needed. That may ultimately be what's concluded, meaning you don't need to do much. But the other idea here is that the banking industry, regulation, and bank liquidity need to catch up to the age of fast money. Joe?
And guys, we know the NWO caused the problem, wait for the reaction, and run in with the solution. And we can clearly see why we're having this banking crisis. So therefore, they can bring in regulation. And we know the small banks can't compete. We know the bank run on SVB was definitely orchestrated for this digital transformation. We know real-time settlement changes the game for the banks. The old model doesn't work. The same way this legacy market doesn't work for the fourth industrial revolution. We know ISO started this month in March. We know FedNow is going to start in July. So you're going to have faster money, so therefore you need more liquidity. The old banking model of fees are a thing of the past. So we're going to have mass consolidation. Big bank takes little bank, but we know they can't say that. So they're going to create event after event as a distraction while they move the money in the back door, so therefore they can build the fourth industrial revolution. Whether robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep are going inside the metaverse. And remember, the crypto teacher told you, because he knows, when it comes to the New World Order, it's all planned out. You have a wonderful day.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leverage to technology, and I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
Crypto Teacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, BitChute, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.